Crossing over to the Nairobi Securities Exchange, we saw Kenyan shares rising for the second day in the session by 0.3% to settle at 4,728.03 points, helped by sustained performance from the foreign investors who are pursuing blue chip companies. Our market watcher for the day is John Degwa. He's a research analyst with Stanlib Kenya. Many thanks for joining us.
Thank you for having me.
Now, kicking off with the news that we saw coming in yesterday with regards to the Fed's QE, whereby they've decided to actually keep the program and scaling back just very little. For you, what reaction do you expect from the stock market and also from the currency?
Well, I'd start by first saying when the first talks of tapering came in, we saw a lot of capital flight from emerging markets and in extension frontier markets back into developed markets. Maybe we might see a reverse of that. I think the issue would be the scale. I expect this to be positive for our markets, especially the equities markets and the currency. I expect to see a lot of foreign investor demand for large caps, especially the ones that have traditionally shown, investors have shown a lot of interest in your Safaricom's, KCB, Equity Bank, and the likes. On the currency, assuming there is now a capital flight back into frontier markets, maybe the currency might get a kicker and probably appreciate to levels of what, 86 or they're about to 85. Yes.
Now, looking at it also at the point where it's coming at a time where Kenya also plans to raise a Eurobond, and of course it's going into the international markets to seek these funds, and it's coming at a time also now, we have the IMF saying that they're very optimistic, but now with liquidity likely to improve with the Feds deciding to keep on with the stimulus program, how then do you see this affecting the plans for Kenya to raise a bond, 1 billion to 2 billion US dollars?
Yes, I think initially what we had thought is if the Fed would have cut back on its stimulus program, it would have meant higher rates, higher nominal and real rates in the US and less global liquidity. However, according to yesterday, that's not going to happen. So I expect subscription rates to be a bit higher than I had initially thought. I also think the yield, the pricing might be a bit better because of the subscription. And I think Kenya might fully raise the funds.
So cheap funds are back into the frontier and emerging markets?
That is the assumption, of course. That is the underlying assumptions, because initially when they talked of tapering, we saw a massive capital flight from particularly emerging markets, and you saw how some emerging market currencies really tumbled. I mean the Brazilian real, the Indian rupee. So the assumption again is that this time there would be a reverse of that. Yes, yes.
All right. Now, Fitch Rating yesterday announced that they're happy with and they've given the green light for Kenya to do the Eurobond, but they've raised an alarm over the current account deficit, which has been widening, over the couple of years, and also the whole issue of the budgetary constraints. For you, what are some of your sentiments that you're reading into that report?
Well, the widening current account deficit has always, I think we've always known that. It's in the double-digit levels as a percentage of GDP. Budget deficit increase is now, I think, 7.5%. So as an investor, these two deficits are always going to be a key factor to look at. But when you look at it, when you think about it, all these deficits are being funded by capital inflows. So overall, on the widening deficit, overall the balance of payment position is a positive and has been a positive, particularly because of FDIs, the diaspora remittances, portfolio inflows, and $2 billion into this market. I mean, it can only get positive. Yes.
All right. Now let's shift gears and talk about Ethiopia, which is Africa's second biggest, most populous nation, second most populous country, and we have Kenya, which has been trying to get its foothold into that market for a while now, and we understand now that Brookside, which does a lot in the dairy farming, that they're going to actually acquire 20% in a local farm in Ethiopia, which almost sends signal that it's opening up, the economy is now opening up. And we have a lot of Kenyan companies that have been trying to get into that market, including Equity Bank, Safaricom, and other banks that have actually single-handedly said that they would want to get into that market. For you, what do you read into this?
It's a very interesting one because for a long time, just like you mentioned, a lot of Kenyan companies have been looking at Ethiopia very keenly, and you talk to the big ones, I'll tell you that they've even made trips, they've spoken to the government, but under the previous regime, it was a very closed sort of economy. Maybe now with the new regime, things might change, things might look up, especially in the banking sector. From what I understand, the penetration levels are very low, So most of the, especially retail-focused banks would really want to get a piece of the banking sector.
Of course, this is 91 million people that you're talking about.
Yes, and a much younger population, and growth rates are still higher. Remember, Ethiopia is classified as one of among the top 10 fastest growing countries in the world. So, I mean, any multinational would want a piece of that growth. Yes.
So going forward, we are likely to see probably the relationship deepening?
Well, you would assume that would be the case, right? Because when you look at it, dairy is more of a consumption play. Again, remember, we're also doing electricity. We're also buying electricity from Ethiopia. So I think slowly, it might take time, but I think slowly, the economy needs a lot of these private sector players because I think how it is structured right now is that the government is a big spender, and a lot of much of the GDP growth comes from the government spending and whatnot. So there is very little room for the private sector. And I think Ethiopian policymakers have realized this, and they're going to slowly welcome private sector players. Yes.
That would be an interesting space to watch.
Very interesting. Yes.
All right, now looking at Portland Cement, which is 25% owned by government, now it looks like it's a step closer to privatization with a proposal already tabled in Parliament. Do you see this as a good win for them, especially in light of the competition that is coming in? We have Aliko Dangote saying that he's going to invest a couple of billions Kenya shillings to get into this market. So then how then do we see this favoring Portland Cement?
Well, I think it's positive. It has been in the making for a while now. If it does materialize in the nearest future, that will be a good thing. They've been lagging competition in a number of ways. If you look at the share price, it's really lagged competition. If you look at in terms of production, in terms of growth stories, in terms of management.
It's just behind the curve.
It's just behind the curve. So assuming they would privatize, I think it's a good one for them. And going forward, I think it's something we should watch out for.
Do you think that is going to inject some optimism and probably help them, scale up?
Well, yes, I think so, because I think they're known to have one of the richest reserves of all the cement in terms of clinker. So I mean, anyone would want to get a piece of that. I know even other larger players had been looking at buying a stake, but I think the government said no. So going forward, I think it will be a good pusher for them also. I'll be looking out for the share price and how it performs in the next 2, 3, 4 days.
Of course, clinker is the main cost for cement companies. Yes. How do you see the full year performing? We're expecting the results in the next month. How do you see the full year performance coming in?
Well, I wouldn't expect anything out of the ordinary. Just low double-digit growth, I think, yes.
Which is very low considering that we have had ARM Cement coming in at good figures, and also Bamburi.
Yes, Bamburi. Like I said initially, they had been lagging their peers in terms of production, in terms of revenue. Costs had been on an upward trend. Finance costs has also been an issue for them. So it'll be interesting
and
to
also
see
boardroom wrangles that they've had initially.
Yes. So when you blend all these factors together, it's been a no-no for EAPCC and a yes for other cement manufacturers in the region. Yes.
Any other optimistic stock that you're eyeing this week?
Given what the given the Fed's decision not to taper its asset purchase program, I'll be on the lookout for, I think, large caps at this point. Your Safaricoms, KCBs. I think we might see some sort of a soft rally in the stocks, and I think the Fed's decision is a positive for this market. Yes,
and we'll definitely keep a keen eye on that. Many thanks for joining us as always. That is John Degwa. He's a research analyst with Stanlib Kenya.